to Shanghai, China. This is the financial capital of China. It's also a hub for commerce, culture, industry, and even tourism, and the largest shipping container port in the world. A first-time buyer looking for a home near Shanghai wouldn't find one they could afford within an hour's commute of the city. It's one of the most populated cities in the world. Previously, we spoke about China's success in creating manufacturing capacity, and with it, better jobs and increased wealth. The key to their success is that their currency, the yuan, or renminbi, has been pegged artificially lower than its true value, pegged to the US dollar. Chinese goods look more attractive to US consumers than domestically produced items. And this has really been the key to China's success, how they've been able to get a lot of manufacturing facilities and the corresponding jobs and the growth, really, these industries provide. So in the last few years, China has seen tremendous growth, and real estate too has seen growth, all sectors. The market turmoil of 2008 was a symptom of what's been happening in the global market. The global economy has been slowly adapting itself to the great transfer of wealth from the United States to China. The export of these production facilities and the jobs that come with the factories from North America to China, which really has meant the erosion of the greatest source of revenue to the economy of the United States. And that's the discretionary spending of the middle class. And that's really the core reason why the United States is in a lot of trouble. They don't have this discretionary spending they once did, because those jobs are in China. And those are good paying jobs too. So in the United States, we see the scar of unemployable, highly skilled people. Those are the good paying jobs. And also we have unemployed general laborers as well, which doesn't help matters either. And also we have the knife wound of the distressed real estate. That's really just a side effect of people not having jobs and not having the money to be able to keep their house. Well, that's just a side effect, the lack of cash flow. It's so bad that some houses in some areas in the United States, they're for sale at the price of a luxury car. And if you look at other posts I've put here, you'll see that they're not shacks. They're beautiful houses that anyone be proud to own. So in China, to keep their currency low, the yuan, they bought U.S. debt. They have more U.S. debt than anybody else in the world. So China is awash in money from investments and their massive trade surplus as well. So they're sitting on all the stockpile of cash with their artificially low exchange rate. So the Chinese are thinking, what are we going to do with all this money? We can't just keep it in the bank, because with the economy so hot in China, that sitting in the bank, you're losing money. The interest payment is much less than the growth of the economy, so you're losing money. So people with money realize they got to invest this money that they have laying around. So they invest in real things like commodities, gold, real estate as well. So if you remember, early 2009, the world was combating the financial crisis that began with the failure of Lehman Brothers and was continuing with government bailouts to different corporations. General Motors, a former industrial powerhouse, was one of them. And this was on the minds of everybody in the world. Even China wasn't immune to the crisis. China, they injected more than $500 billion US into their economy in the form of stimulus. And they also lowered their key lending rate, just like everybody else around the world. So they were worried about the US, which had previously been the engine of the world economy, because the middle class in the United States has been really undermined there. So everybody's worried about this. So China, lowering their lending rate and injecting their economy with more cash, this led to rapid growth in China. All sectors, I'm telling you, all sectors. There was investments, factories, more factories, shopping, high-end shopping, all sorts of things. And also, it led to increased house prices, obviously. It mirrors what the economy is doing. So, in the largest cities of China, the average house price increased 3.9%. That's in 2009. Some of those cities saw increases of 1% in one single month. By December, owning Chinese property began to be out of reach for ordinary Chinese people. And many people began talking about a Chinese real estate bubble as well. At the time, I was asked about that, if I thought China was in a real estate bubble. And I said, well, I agreed that real estate might be overvalued, but the bubble in China was unlikely because the Chinese were not buying with credit as they had in the United States. They actually had money. They were actually paying money for the real estate they were buying, or at least they had cash sitting in reserves for a rainy day. So a bubble wasn't more likely to happen. Like in the United States, they bought on credit, and sometimes credit obtained fraudulently. So obviously, the situations in the two countries was much different. When I was speaking to people, I based my assessment on that. But the Chinese government was under pressure because real estate, as I said, was getting out of hand for ordinary Chinese people. People couldn't buy real estate anymore. So what they did in the largest cities of China, they put a new restriction on the buyers of second homes. Buyers of homes larger than 90 meters square would have to put a down payment of 30%. And if it was less than 90 meters, they would need a down payment of 50%. And the ability to get a loan for a third home was suspended. So, if you're an investor and a door closes to you, what do? You need to invest your money, as I said before, because if you don't, you're losing money in the bank. Sitting in the bank, you're losing money. So you just go to the next door. So that's all the Chinese people did. They had these new restrictions in the largest cities of China, so they went to the second tier cities and the third tier cities of China. And also they went internationally. Some even came to Canada, as you know. They went to Vancouver, and the prices in Vancouver went up. And they even came to Toronto with their money to invest in real estate. So that's what happened. The Chinese just invested still in real estate, just in different places. So eventually the government caught up with them again, and they changed the restriction to include second tier and third tier cities. Anyways, but that wasn't until a year after, I think they caught up. But anyways, before that, while they have these restrictions on the largest cities in China, everyone saw that the great returns could be made on real estate because the price of real estate was increasing. So what happened is you had companies totally unrelated to real estate would sprout a real estate division and start developing residential complexes. Government-controlled corporations with all these huge cash reserves began bidding against each other for the most remote vacant lands because obviously they were cheaper, and at the time the second tier and third tier cities didn't have these restrictions on them, so they could get them for better terms. And so imagine what it was like in Shanghai. You have these massive corporations who really are government entities and don't have shareholders looking after the money. They're just basically buying like a game. So this was the situation, and driving the price up ridiculously. So you had companies who had no real estate experience whatsoever, shipbuilders, oil companies, chemical companies, defense contractors, telecom companies. They all got in the game. They all had real estate wings. So no research was done on potential building sites. You didn't have, like you would hear, consideration of future growth or existing infrastructure, or even caution. Or they didn't even have a deep understanding of value or costs or return on investment even. They just bought what they could because the prices were increasing so much, so quickly that they had to get in on it. What they wound up doing was building residential buildings, commercial buildings, airports, all the infrastructure that you would need for a city, in the hopes that if they build these cities, the residents would come. You had vacant cities that are excessively overdeveloped, cities with housing inventory available that has little demand for it, and what do you think? Do you think the prices will drop because of supply and demand? There's so much supply and not too much demand. So you think the prices will go down? No, the prices aren't going down. China is a command economy. They don't have to worry about supply and demand. These government players who've overbuilt these cities still have cash reserves. They have no economic pressures on them whatsoever to sell the property. They could sit vacant for years and it would make no difference to them whatsoever. If anything, there's a government policy that's trying to encourage rural Chinese to come to the cities because they discovered that people who live in the cities make more money and they contribute to the economy more than the rural ones. The Chinese are trying to grow their middle class by encouraging these people who live in rural areas to come to the cities. So they figure these vacant cities may actually be useful because when the people come from the rural areas, they'll have their houses there waiting for them, already built. In 2010, because of these price wars, I guess you'll call them, bidding wars amongst the various companies, pricing increases for 2010 was 10.3%. And that's just the average, you know? Like, there was more, even crazier than that. January 2011, Shanghai and Chongqing began charging property taxes to dissuade ownership in those heavily demanded cities. In 2011, China raised the benchmark interest rate 3 times. But more importantly, what they did was they increased the amount of money lenders need to keep on hand out of total deposits. And what that means is, for the amount of money that they get from all their customers, the deposits, they have to keep 21.5% now of that total money on hand. They can't lend it out to people. So that's the highest it's ever been. And what this effectively did was limit the amount of loans that the banks can give. You know what? In my opinion, that's the one thing that I'm going to tell you guess what happened, guys? From then on, month over month, there was very little price increases in all residential areas. Before it was the 1%, remember? But after they enacted that, the radical price increases stopped. And in my opinion, it's not because of anything else. It's not because of the increase in the key lending rate. It's because of the cash flow. They cut the availability of loans, and that's what killed. You know what? It might have even killed their economy, because what happened is private lenders had to get in on the money lending, and they were charging like 10% interest per month. What you heard was factories that needed a loan having to go to these private lenders, these sharks, 10% per month, you know? So one day, the company would be there, and next day, close the door, let's get out of here, we're done. They closed up shop. And that happened quite often. Like, this is recent. This is recent, so this still hasn't played itself out yet. But in my opinion, that if you ask me what happened to China, that's what happened. They're asking the banks to hold too much money on hand. So the story here is increased rise, and stable housing prices of China. And right now, that's where it is now. What might happen in the next few months would be interesting to see. But I think the Chinese are okay. They still they won't. The real estate bubble won't burst there. Still, I still believe it won't burst. But I think growth is pretty much done for China until they get rid of that bank requirement. So what's next for real estate in China? I still think we're going to see growth. China is a growing economy. Like their government says, their middle class is growing. So there's a lot of room for it to grow. And with the economy, the real estate will increase as well. And I don't think they're going to change their policy with their yuan, their currency. So they'll keep it pegged there, because without it, their exports will be lost. And that's really what's driving them. So they're not going to give that away. And in 2011, the government says they're going to build 10 million houses for low-income people. So we'll see if that makes an impact. 10 million houses for a billion. It's still a small amount, right? So the story with China isn't over yet. We'll keep you updated as things progress.